Nothing in this video is a buy or sell recommendation. Please do your own research before investing in any stocks. This video is made purely from an education perspective and I hope you learned something from it. Hello and welcome everyone to another video on Invest Like a Girl. Today's video is on a very interesting company called Zaggle Prepaid Ocean Services Limited. To give you a brief about the company, this is a FinTech company which operates on a SaaS-based platform, which is into expense management, and the key customers are corporates who partner with Zaggle, and Zaggle in turns provide them an entire suite of products for them to track and manage their expenses effectively. So the key categories in which the company operates are expense management, employee reward, meal passes, fleet management, and also petty cash management. There are a bunch of Zaggle products which are used by their clients, and we'll look at that in detail. The company is essentially trying to transform from a product-based company to a platform-based company. Now, what it means is Zaggle is trying to build an entire ecosystem with their suite of products that they can cross-sell to these customers and benefit from their lower cost of acquisition. Now, coming to the total market for the company, so the company has huge room to grow because the total addressable market for this kind of a company is close to 130 billion rupees. Now, also the company has done around 8,000 crore worth of transaction just from their platform Zoyer, which is for the vendor management system. Now, something which is very important to understand at this point, the company earns revenue per transaction, which is really interesting for the company because as the amount and the size of these transactions grow, the company's revenue also will grow proportionally. In terms of the competitor, the company has multiple competitors and across various of its products. So, for example, in the meal benefit, it competes with Proxy, erstwhile Sodexo. It also competes with SAP Concur, which is again an expense management system used by the corporates. And in terms of the channel incentive partners, it also competes with companies like OC Diner and Pine Labs. Now, coming to the business model of the company and the key stakeholders of the company. What is interesting to see here is that the company operates with multiple stakeholders, and each of these stakeholders are closely intertwined with this entire ecosystem which Zaggle claims to be building. Now, what are these key stakeholders? One are their end customers, the corporates. Second are the users, that is the employees of the corporate. Third, there are these merchant partners. And lastly, the partner banks. I'll give you a quick brief of how each of these customers and stakeholders are benefiting from the ecosystem that Zaggle is creating. So what Zaggle is trying to solve here is they are trying to build a system where the end credit card expense done by the employees and the tracking and monitoring of such expense by the corporates are brought together on one single platform. And this is the key problem that Zaggle is trying to solve among others. The customers are getting one single dashboard to view all of their expenses throughout their retail chains or their sales team across the geographies. Zaggle also provides their prepaid credit card partner with various banks to their employees so that all the expenses done by the employees are directly produced in one consolidated dashboard for the corporates to view. Zaggle also earns revenue from their merchant partners, and recently they have had a huge win from MasterCard, and this should also provide tailwind to the already extreme guidance that the company has provided. Now, coming to the banks share part of their revenues and the transaction based on the transaction volumes that are done by these end customers. One thing which stands out for Zaggle is their interesting client journey. So initially they would partner with a customer by offering a very low SaaS platform fee. Once the customer is onboarded, Zaggle does a lot of cross-selling because they have a bunch of products that they feel that the end customer can benefit. So this is a unique proposition that Zaggle creates for the customer, and this also helps them bring more revenues, not just from a platform basis, but also from this additional products and in terms of the additional volume of the payment that comes that traverse through this product. Zaggle already has a lot of high marquee clients in their customer list name, and that also creates an additional networking effect to acquire newer customers. Also, one interesting thing that stood out, that the churn ratio for Zaggle is abysmally low, 1.5%, which really goes to say that how the end customer really sees the benefit of using Zaggle's products. So one might ask, while the corporates are benefiting from getting this one unified dashboard to track and manage all of their expenses, how are other stakeholders in this benefiting? So it's not just the corporates who are benefiting from these cards, but also the users, the employees are benefiting from this card. So Zaggle also offers a lot of rewards for each of the expenses that are done by the employees, and that in turn can be redeemed on various platforms like Amazon or Flipkart. And Zaggle again gets a big portion of the revenue from these reward spends that the employees do. Coming to the banks get access to a large pool of employees, and this in turn also helps the bank to drop, say, their own branded credit card or an additional card to this end customer. Also, Zaggle has partnered with a lot of other merchants like MasterCard, RuPay, and Visa, and they also command good amount of revenue from these merchants by issuing Zaggle prepaid cards branded by these merchants. Now, one could argue, how is Zaggle different from any other IT company listed out there? So the key differentiator for the business is that the cost of acquisition for Zaggle is very low, given that they can enable a lot of cross-selling. And recently they also gave this example on their con call, how they helped Subway manage some of their petty cash issues while they were already using the vendor payment solution from Zaggle. Also, additional mode the company has is, as the amount and the volume of these transactions increase, because Zaggle's unique model earns revenue per transaction, their revenue automatically increase by the sheer increase in the volume of such transactions and also the value of such transactions. Also, one key interesting thing from the company is that the company is trying to build an entire ecosystem around various different expense management and expense saving platforms. And as we see the rise and increase of the number of corporates in the country, or the increase in the users of these corporates, or also the increase of the size of the corporates, or the increase in the adaptability of such products, Zaggle is continuously trying to grow organically as well as inorganically to garner as much as the revenue and as much as the transaction volumes that they can from these corporates. And the four growth levers that the company have, which is the corporates, the users, the products, and the amount of the transaction. The company can continue to grow on this levers. In the recent con call, the company also mentioned how they are focusing on cross-selling a lot of more products to the existing clients than rapidly increasing the number of the client base. And also the company is sitting on a fair bit of operating leverage. So as the company starts seeing uptick in their client base, they should be able to generate more profits without doing a lot of costs on their side. Now, looking at some of the key metrics from the company has been reporting solid growth in the past few quarters, with their quarterly revenues growing considerably. Additionally, the key performance indicators for the company, which is their client base and their user base, that has also shown a steady increase in the past few quarters. It's also interesting to see how the company has shown an increase in not just their SaaS or the platform fee, but also the program fee and also their platform revenue from Zoyer, which is their vendor management payment. Now, lastly, concluding the video with the valuation. So the company has guided a 50 to 55% revenue growth, while they have stated that their internal guidance is much better and they foresee the demand for the next few years. The company has also plans to enter different geographies, and they are trying to raise 950 odd crore of capital to acquire for inorganic and organic growth. From the current levels, the company's valuation also seems to price in a lot of this growth that the company has guided, but the company can still surprise on the positive side if they continue to beat their guidance like they have done in the previous quarters. Coming to the risks of the company, now the company doesn't have any listed peer in its domain, so it's very difficult to value the company. Also, the company does a little bit of everything, so it doesn't have one particular product which they sell, but a bunch of products, and they are also constantly expanding that suite of product. So it will be very interesting to see in the future how the company performs and how they are able to leverage some of these growth triggers and grow along with the ever increasing number of corporates. Now quickly, let's look at the valuations of the company. So what I have here is the P&L of the company downloaded from Screener, and I'm trying to project the next 2 years of revenue and profits for the company. To give you a quick view of how this is done, I have extrapolated the company's revenue based on past 12 months, which is the trailing 12-month number, and made a bull, bear, and base scenario here. So based on the company's guidance, the revenue is supposed to increase by 50 to 55%. So that's what I have done here for the next 2 years. And similarly, on the operating margin, the company currently does an operating margin of 9 odd crores. That's what I have assumed conservatively here. In terms of the net profit margin, again, I have had a conservative net profit margin of 7%, depending on the bull or the bear scenario. So with that, we get a net profit of 107 in the best case and 87 in the worst case for 26. And likewise, what you see here is for financial year 27. So based on that, I'm trying to calculate the EPS of the company. So EPS is earning per share, and this is done based dividing the profits with the number of outstanding share. So you can see the number of outstanding share for the company from here, and there you go. So because the company has also given guidance of raising capital both from debt and equity, I am assuming equity dilution, which would mean increase in the number of equity shares in the market, and I have assumed 10% increase in the number of shares. Of course, if this equity dilution is higher than 10%, I would expect the revenue growth to be much faster than the stated guidance of 50 to 55%. So with those assumptions, which in my view are conservative, I've tried to calculate the P for the company, and this is how you calculate the forward PE on the company based on the earning per share. So you can see that the forward PE for the company for 26 is good 78 to 63, depending on what case you're considering. And likewise, in the FY27, the company is trading at 44 to 55 odd PE. So in conclusion, as I stated earlier, with the current price, a lot of the growth that the company has promised is already priced in. However, if the company continues to surprise on the positive side, like it has done in the past, the company and the share price should also show. The company and the share price. So the company and the share price should also show similar increase as it has shown in the past. With that, I'll conclude the video here and see you in the next video. Thank you for watching this till the end.